Hello, my name is Carlos McCord, a CPA, and today we have another stock analysis for you. This one is a controversial stock because of the change in strategy, where the operations are kind of moving from an AI company and potentially moving to more of a treasury company. So we're going to take a look at that and break down what's going on with the business, break down the fundamentals, and we'll see if we get to evaluation at the end. So this company is MicroStrategy or Strategy Incorporated. CEO Michael Saylor. And the controversy comes from his Bitcoin strategy, where he is getting as much capital as he can and buying and holding Bitcoin. And that has kind of driven the stock price up recently. I think they hit a high in November, but that's starting to come down a lot. So we want to take a look at the business and the fundamentals and see what the strategy is and see if the business is quality based on our opinion on the quality metrics that I review. So let's take a look at this company at first. Now, I hadn't looked into this company a lot before just because this company fundamentally, I didn't think it was kind of worth my time, but it was trending online recently. So I decided to take a look. So MSTR is a ticker symbol, trading at $288 per share, 286 after hours today. This is March 31st. So I am, looking at a company. I like to look at the little summary and kind of read a little bit about it. So I see that this is they provide artificial intelligence powered enterprise analytics software and services the US, Europe, Middle East, and Africa. All right, that's cool. One thing that I do look at when a company does not have earnings, you see no earnings here. That is normal for a lot of newer tech companies. I'll see they have a beta of 3. So this is a very volatile, active company. I see that this 52-week range, $101 to $543. So that's a very wide range. And we see that the recent decline here from that high in November to 288 now. So I see these things. I wonder how long has this company been in business? Is this a newer company where I can stomach a loss if I see a path of profitability? I go to the profile of this business on Yahoo, and at the bottom I see this company started in 1989. I was 6 years old when this company has started, and they have no earnings this year. This is just a bad sign, just off the bat. Looking at their definitions, I was reading and it talked a lot about AI, and it talked here that they are into the Bitcoin development. In addition, it engages in the development of Bitcoin, and that kind of threw me off. So I'm like, wait a minute, I knew they were buying Bitcoin, but are they developing? So are they mining Bitcoin? What's going on? So this is the description. Yahoo Finance, they get all of their data from Morningstar. So it's reputable, you know what I mean? It's definitely something you can depend on. But I looked at this definition from Reuters, and off the bat, they say this is a Bitcoin treasury company. Now, this is Reuters, and the other one was Morningstar, 2 reputable sources starting off by saying 2 totally different things. One is saying the Bitcoin treasury company. Another one is saying the AI software company. So what am I looking at? What type of business is this? So those factors are kind of giving me heartburn. Started in 1989. It's super volatile. They have no earnings. Earnings per share right now is negative $6 per share. And keep that in mind, negative $6 per share. That is just not a good sign for a company that's been in existence since 1989. And what's going on. So I think one thing I wanted to look at, let's go straight to the revenues. Well, no, before we do that, I want to look at the 10K real quick and show you some things. Now, what they're doing is bringing in capital and buying Bitcoin and holding it. I don't understand why you need a business to buy Bitcoin and hold it when you can just buy Bitcoin and hold it yourself. What's the purpose of that? I don't get it. Okay, so this is the AI company. They're buying Bitcoin and they're running their operations. So there's a potential for the enterprise to grow in value from 2 different sources if you're bullish on Bitcoin at that. But I'm really not getting it here. But check this out. They have this whole section, risk related to our Bitcoin strategy and holding. So if you're interested in this company, I'd encourage you to check out this section in their 10K, their annual report that came out last month. And this line here is what throws me off. It's true, but it's just weird that that this is where we are in the investing world, where companies are doing this and putting stuff like this in their financials. Bitcoin is a highly volatile asset. Of course, we know that. Fluctuations in the price of Bitcoin have in the past influenced and are likely to continue to influence our financial results and the market price of our listed security. So you're basically investing in the company that's holding a ton of Bitcoin, and the value of the Bitcoin is going to impact their financial results and the stock price. Why buy the stock when you can just buy Bitcoin and experience the same thing? What is the point here? You may think it's easier or not, but there's another point we're going to talk about later on that shows like investing in this company makes no sense when you can just buy Bitcoin. So let's look at the revenues in this company and get right into it. All right. So revenues, 530 million to 463 million. So in a 10-year span, they're declining. This is a declining business. The revenues are going down. They have 1 year, 2021, 1 year of positive revenue. Why is this a company you want to invest in? I don't know. Just off of that, the analysis would be over in my opinion, but hey, let's have some fun. Gross margins, 80% in 2015, 72% in 2024. So revenues are declining, margins are declining. So they're losing money and it's costing them more to make the product, to deliver the product to the customer. This is a sign that a company is dying or declining. This is not good. So revenues, no good. One thing I wanted to point out with revenues, looking at their 10K, just check this out. Let me go to the revenues. All right, it's a balance sheet. Let's go to their income statement real quick. Okay, looking at their income statement, they have 4 lines of revenues, 4 product lines or sources of revenue. We have product licenses. Let's look at this. 86 and 22, 75, 48. It's going down by a lot. Subscription services, 60, 81, 106. Okay, subscription services are going up. Okay, and that is pretty solid rate. But let's look at the other 2. Product support, 266, 263, 243. So their largest revenue source is product support and it's dropping. Other services, 85, 75, 64. Total revenues, again, we saw that it was declining, 499, 496, 463. Revenue is going down overall. Only one of their 4 revenue lines are increasing, but not enough. Their major one, product support, is going down. So that's a sign that this business, again, is declining. You have 4 lines, but only one is improving or even stable at that matter. So that's not a good sign. So let's go back to the analysis. Revenue and margins, we see that that's no good. Now let's look at net income. Okay, over the past 5 years, 1, 2, 3, 4 years of losses. That's bad. And these losses are down. They had a gain in 23, but barely, but down again. 1.4 billion and 1.1 billion in 22 and 24, respectively. Not good at all. Net profit margin all over the place. This isn't good. Why would you invest in a company that's losing money and falling, declining? The results are going down. We don't like that. There's a lot of good companies to invest in. Why invest in something like this? Same with free cash flow, because a lot of companies, again, I was thinking initially, how new is this company? Do they have cash flow, but they have losses on the income statement that aren't regarding to actual cash transactions? And that's not the case. They have 5 straight of losses on the free cash flow. So they're burning through cash. 1 billion, 2.5, 287, 1.8 billion, and $53 million out the door. They're burning through cash. They're not generating cash in their operations, and they're not growing in their revenue. So this looks like a really bad investment, but it's popular for some reason. So let's look at this. Debt to free cash flow, horrible. It says great leverage here. I guess I got to update my formula. I apologize for that. This is poor leverage. Now, let's note that debt is coming down. So they're not taking out a lot of debt to fund their Bitcoin exploitation strategy. However, they still don't have cash flow to pay down this debt. So to pay down debt, they must be selling shares or bringing cash. And we'll look at that next. So let's look at the shares outstanding. And then, of course, it is going in the wrong direction. This is what they're doing to bring in the capital to buy Bitcoin. They're selling shares. So let's look at this real quick. This past 2 years, they increased the share count by 20%, and after that by 40% in the two subsequent years. That is a very bad trend and aggressive growth of dilution for the shareholders. Again, I can buy Bitcoin and just hold it and be exposed to those same risks. But if I invest in this company and they're going to buy Bitcoin and hold it, I'm exposed to the risk and I'm being diluted. They're bringing in people every year. That's how they're bringing in this cash, by selling more shares. So you're being diluted. Now check this out. This year alone, they increased their share count by 55.8 million. 55.8 million new shares came in, and that's how they were able to buy this Bitcoin. So what's the play here? I guess it's all good when Bitcoin is going up at a rapid rate and you're thinking, okay, the value of Bitcoin is going up faster than the share dilution. But as we see since the beginning of this year, that's not happening. You're being diluted and the value is not skyrocketing up. So over a long period of time, is the value of Bitcoin going to outpace the share dilution? When Bitcoin is going up, he's a genius. When it's not going up, clearly it's not a smart strategy for a business to be doing this. I don't know what's going on with their revenues and their AI stuff, but this seems like a really poor investment idea when there's so many other great companies to invest in. Anyways, I guess, again, you must be super bullish on Bitcoin, but even if you are, why not just buy Bitcoin and hold it yourself? I don't get it. Here we go. Of course, they're losing value. Over the past 5 years, their return on capital, because they had some operating income some years ago, so that's why it's not negative like the past few years, but they did have some pretty significant operating income over the past few years. 5.6% there, but their cost of capital is 9.7. So over the past 5 years, this company has lost economic value at the tone of about 4% per year. Why would I put money into an operation that's losing economic value? Just because the stock is going up at the moment, that's not a smart idea. So again, why I'm not even going to value this company. Why do it? They have no earnings. They have no cash flow. They're losing value here. It would take me a lot of work to figure out some things to come up with a valuation or intrinsic value estimate. It's just not worth it. So let's look at the scorecard real quick. Okay, revenue growth. 1 year of revenue growth in the past 5 years. Not good. Profitability, they had a loss in 4 of the last 5 years. Free cash flow trend, we're moving backwards. We're declining and losing money, burning cash. Debt, they have no free cash flow to pay off their debt. So even though the debt balance isn't high, they have no debt to pay it off. They're not paying a dividend. The shares outstanding are increasing and they're losing value. Why would I even value this company? We're skipping there. So I wanted to show you something real quick. This is how they are funding their Bitcoin activities. Now, we can go to the cash flow statement really quick. And there's 3 sections of the cash flow statement. There's the cash from operations. This is the cash that are generated or lost from them just having their doors open and operating their business. Everything dealing with the delivery of their product and running their operation. That's what the first section is. The second section is the investing section. This has to do with the investment in property, plant, and equipment, acquisitions and mergers, and anything that the company is doing internally to reinvest in itself. And then we have the financing. This is the debt and equity, or just the capital transaction. So the money from debt, paying down debt, receiving it, paying dividends, repurchasing shares or selling shares, anything dealing with shareholders. That's what the financing is. So we see that we had a loss. We start with the loss on the income statement. We end up here with a negative $53 million in cash. All right. So they're burning through cash. What we see, they bought about 10.5 million in property, plant, and equipment. But what's this right here? $22 million that they spent. $22 billion that they spent on Bitcoin this year. And where is this money coming from? Two places. This 5.6, it shows debt repayment as a positive. So really this was bonds. They sold convertible bonds to some shareholders. So pretty much what they have to do, you sell bonds, just like if you buy a bond from a treasury holder, you're going to get interest payments for the term of the loan or the bond. So they sold corporate bonds. Someone bought it. It's pretty much debt that they're taking out. They have to pay interest payments on those bonds. And at the end of the 5-year period or however long it is, those bonds are convertible. They either pay the bond back to the bondholder or the bondholder chooses to turn that bond into equity. So that's what happened here. This is that 5.6 billion is. In the 16.3, this is the shares. They sold $16.3 billion worth of shares. So everybody who has the stock is being diluted so that they can bring in money to improve their operations. No, that's not what they're doing. They're not even trying to improve their operations. They're buying Bitcoin, which anybody who bought any of these shares, just 16.3 billion, could have done on their own, or invest in a Bitcoin ETF or something. This is absolutely ridiculous in my opinion. All right, so that's where you would go to see exactly what's going on with the business, the cash flow statement. I believe this is the most important of the three, because you start with the income statement, the net income. This is the result of the income statement. And at the bottom, you end with the cash at the end of the period. So it links the income statement to the balance sheet. You got to learn the cash flow statement. So that's my analysis of this ridiculously silly operation, in my opinion. So I hope you enjoyed this analysis. I hope you learned something about MicroStrategy. And honestly, I hope you learned not to invest in it. So let me know what you think in the comments. Let me know if you're one of these silly people that invested in this company. And again, I'm gonna say this before I end. There's a difference between an investment and a trade. When a company has a lot of momentum behind it, there's nothing wrong with trading it. People trade all the time, nothing wrong with trading, but trading is not investing. So don't think just because you're chasing this momentum and you put money into it that you're investing. Sometimes you have to be wise enough to understand that putting money into a stock is more of a trade, swing trading. You put it in, you're kind of watching it. You're not really committed for the long term. Totally understandable. I'm not criticizing that. I'm talking about the people who believe they're buying and holding something quality when they're investing in something like this. All you got to do is read and think. That's why I do these videos. I want you to learn how to read these financials, think through them, and understand what the business is, what a quality business looks like versus a trash business. And they're hiding behind this Bitcoin, but they're not making any money. They're losing revenues. The business seems to be dying, but they seem to be hiding behind Bitcoin as this viable business. Hey, look, good luck to you. Hopefully you're not invested in this, and hopefully I convince you not to, because this is silly to me. So let me know what you think in the comments. I hope you enjoy this analysis, and I hope to see you in the next video.